Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, in today's training, I want to share with you the worst time to be buying any market that gives you a very low probability of doing really well. And all it involves is one indicator in this market. So that's what I want to share with you in today. Guys, if you'd like some help, grab that $7 trading course that I'm running today. You'll be able to see in the link in the description, or go to Johns, JOHNS, flashsale.com, johnsflashsale.com, and you'll be able to grab that $7 trading course right now. So it goes, now here's the thing, guys. You bring up any chart, okay? Bring up any market, any chart out there. It could be the S&P 500, right? And let's bring up a daily chart here. The one thing that I really want you to do, so bring up any market. Let's actually bring up I'm just going to use the S&P 500 just as an example, okay? But we could use any market through here. And what I want you to do is I want you to bring up a long-term moving average, a long-term. So a shorter term is like probably 20 and below, you know, 20, 10, probably 20. Yeah, you're probably looking at maybe 20, 10. So I personally, longer term moving average, like to use a 50, 60, maybe even 100. I like to use the number 52, all right? So let's actually bring up the 52 moving average here. Let's go to this one right here. Okay, cool. So as you can see, I have a daily chart right now with a 52 moving average on here, okay? So here's one simple thing you can do today to make sure that you are not getting in at the worst time possible, and also you're getting in at the best time possible if you're when looking to get in these markets. See, a lot of these times the markets become overbought and oversold. So how do we see those areas in the markets? We're just looking at the charts. So the number one thing I use is obviously the moving average. So what happens if I squeeze my charts up here from it, okay? So I'm going to squeeze my charts up. And again, we're just looking at the one moving average. If I squeeze my charts up as much as possible, what do you notice about the moving average and the market? You'll notice that the market doesn't get too far away from the moving average before either A, we get a pullback to the moving average, or B, it just goes sideways. Okay, it just goes sideways, and then the moving average catches up. So you'll be able to see, like if I draw here, you'll be able to see that when the market gets too far away, so you can see here, this is too far away. This is what you call oversold territory. This is a really bad time. All through here is a really bad time to try to buy it because we're too far away, and therefore either A, it's probably likely to do nothing sideways while the moving average catches up, or in a lot of cases, what happens here, it snaps back to the moving average to balance itself out. You can see the same thing through here, that when the market got too far away, guess what happened? It's now oversold, and then guess what happened? It actually snapped back and came back to the market. Same through here as well too. Notice that the market doesn't get too far away from the moving average. So if we're too far up, if you look over the last couple of years, and you can see, okay, that's the maximum distance there. You can see right here, this was the maximum distance away as well too. As I'm doing this recording, you can see and you can see also here, this is the maximum distance away. You can start to get the maximum distance away. So as the market is starting to get into these overbought territories where the market's just getting too far away from where it normally does, you know we're getting into an overbought territory, and you know it can be very dangerous to try to buy it here because there's a real good probability that either A, it's going to do nothing, or B, it's going to reverse back against you because now it's overbought. It's like an elastic band. The elastic band is like the center of the elastic band, and if it gets too far away, either up or down, you can see what happens when we get too far away, we spring back. Get too far away, we spring back. We got too far away through here, and we spring back to the moving average. So this is going to give you a bit of a gauge on where we are in the market. If we're too far above the moving average compared to the average. You can see that that's the maximum distance, that's the maximum distance, that's the maximum distance. If we're too far above that level, then what happens is now we're overbought, and so therefore we're likely to pull back. If we're too far below, if we're too far away from on the downside, we are now oversold, and we're likely to be coming back into the moving average. That's the reason why this is the worst time, the number one worst time to buy any market or try to short any market when this is happening through here. And that's the reason why with my trading system and why with my trading strategy is that I'm always looking for the market to make sure that it's very close to the moving average. So I know that the market is balanced. We're not too overbought. We're not too oversold, but we're right near the moving average. And then I'm looking to enter in when the market gets close to the moving average. Obviously, I have a set of rules I'm looking for, but the one thing I'm looking for, one thing in my rules is that I'm waiting for the market to be very close to the moving average of the 52. Therefore, I know that it's not overbought up here or like over here. This would be overbought, right? And this here would be oversold in the markets. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.